We are only a few weeks away from what is typically the fall market. And in this episode, we are speaking with the number one BMO Mortgage Specialist, Mr. Mychal Ferrera, to get his take on where fixed and variable rates are going for the rest of 2025. We'll also talk about what he's seeing in terms of activity and whether he's expecting an improvement in that market activity. And we'll also take a look at what's happening with new mortgage originations. Are they ramping up for the fall season, or has there been no real change because of the sentiment that we see? This episode will cover all of this and some more as we explore this anything but normal economic activity we find ourselves in. Before we get started, if you think there's someone who would benefit from watching this episode, all we do is that you share it with that person. In that sense, Mychal, welcome back to the show. And let's get into it.
Thanks for having me.
So, Mychal, rates have been steady for some time now. And I guess depending on who you speak to or what kind of information you're reviewing, some would say rates need to stay elevated. Others are anticipating another rate cut. And when you consider the poor jobs report that we saw in July, where we lost 44,000 jobs after adding 80,000 jobs, we've also seen rumors down south that there could be a Fed rate cut as well. So would love to hear what your take looks like for rate cuts, and also maybe what BMO's take is on the rest of the year too.
For sure. So, I think right now we're seeing a lot of, stability in rates. Rates, both fixed and variable, have been kind of on the low end of 4% for better half of a year now. The official call kind of varies depending on which analyst you look at. RBC saying no more cuts. BMO still predicting 2 more cuts, and I believe TD and maybe a couple other banks are predicting 1 more cut. We expect fixed rates to probably stick around the low 4s, high 3s, which is kind of what we're seeing today. But overall, I think that things just seem more stable on the rate front. We're definitely not seeing as big of swings for now. I guess a lot of the news has worked its way through, but obviously the biggest one is still this trade deal, the jobs report, inflation, which still could have an impact for sure. But I believe that we'll kind of still see rates teeter in this 4% range for some time.
So pretty safe to say then not a real big change anticipated for the fall market.
No, it's hard to say because we're seeing some movement, but in terms of rates, maybe we'll see a cut by the end of this year. Maybe not September, but perhaps later in the year. But it's still possible, and we might still be only looking at another quarter point.
So, Mychal, I know that was BMO's take, but what's your take? Do you think the interest rates are going to cut, or do you think we're going to hold?
I think we'll see at least another cut. I think it's largely going to depend on what happens with the Fed. I think they have to catch up a bit. And if they do, then I could see a couple more cuts.
Cool. Okay, let's move on to affordability because, it's improved marginally. We've seen reports across the country and property prices across the country that have shown that real estate across all property types is down by about $150,000 in nominal terms since the peak of 2022. So when you consider that, and when you look at what affordability has been like for our province in particular, is that still the number one issue that people who are getting new mortgages are faced with? Or have you seen an improvement in terms of what they've been able to buy and the kinds of deals that are coming across your desk?
Yeah, definitely starting to see actually, just in general, the bigger segment that I've been seeing, one is end user and first-time home buyers. And just given all of the tools, programs, policy changes that we have seen come into play over the last year, I think it's gotten more affordable for first-time home buyers to enter the market. And, I would say that that's kind of making up about 65% of the deals that we're doing. And, we vary doing deals about 20 of them a month to 40 of them, right? And when, you start to really notice these trends and definitely, I think as a first-time home buyer, it's never been easier to enter the market. If you look at the previous years, there's multiple offers. Rates were low, but even then, we were qualifying at the Bank of Canada rate, which I think is like 5.25. So, right now, if you're getting a rate in the high 3s, you're qualifying at, 599, right? So, you couple that with, the PTT exemptions, the GST exemptions, the FHSA, the increase in RSP withdrawals, the home buyers plan. It is creating an environment for first-time home buyers to enter the market. And the nice thing is, most of the files that we are seeing, they have a week, 10 days for subjects, right? So I think that it is a good time for, especially for first-time home buyers, to explore, and it is easier to get it. Also, sorry, another point was, they made the change to insured mortgages, whereas a first-time home buyer you can go to 30 years. I have noticed that has had a pretty significant impact on qualifying as well.
I could see that. I mean, as a first time home buyer, you're really concerned about what your monthly payment's going to be, and I think if you can get that to a place that becomes palatable, the chances of you buying a home or getting into the housing market improve dramatically. Okay, this is an interesting question because, Mychal, it's sort of a two-part question here, and I really want to consider, down south we have the big beautiful bill that passed, right, and it's very inflationary by its just by the way it's written. And then on top of that, we've had a lot of spending up here in Canada as well, especially in the first part of this year. So I think, when you consider that inflationary spending or deficit spending is happening at a very rapid rate here, I'm of the impression that inflation will probably rear its ugly head again at some point. And so when you consider that take, and I'd really like to hear your perspective on variable rates versus fixed rates, because that is always, in your world, that's probably the question you get asked all the time. So what are you seeing, and what are you consulting? Like, what are you telling people to consider?
Yeah, no, I mean, that's the golden question that I think everybody asks. And I think it's firstly dependent on your situation, right? So the first question we always ask is, what is the intent with the property? What is, your plan with it? Do you plan to move it? Do you plan to stay? I think understanding that as a first point is very, very important. Now, moving forward from that, the problem, well, the one thing I've noticed is people always tend to kind of hear about things months behind, right? So, when you talk to most people, that, oh, there's more cuts coming, there's a lot of cuts coming, there's 2, 3, 4 cuts coming, and I'm like, oh no, like, depending on which color bank you choose, you're getting a different kind of read on it, right? And I've always just taken the stance that, especially for first time home buyers and users, do you want stability? Rates right now are great. Like, historically speaking, if you get into the sub fours, into the high threes, that's a good rate. So, we're seeing a lot of strength in the 3-year fixed across all the banks. That's where our best rate is. And if you, want to go with the variable, I think short term, the variable could play out, right? And I'm not so much worried about the short term on the variable, but I do worry about year 2, 3, 4. Now, with the variable, you can fix it for equal or greater term left. But the catch on that is, and this is what people, oh, well, I'll just fix it. Well, the issue is, by the time that most clients think about fixing a mortgage, it's already too late, right? They've already heard from people, from news, from social media, that rates are going up, and then they go in. It's exactly what happened last time with rates. By the time people went to go lock in, rates had already gone up quite a bit. So, I think if it's an investment property and you think it's a short-term play within 3 years, a variable is probably an okay option. If you're an end user, first time home buyer, I believe fixed, especially where the rates are today, are a great option. Again, it comes down to your individual preference, your plan. But I would be lying if I said I'm not biased to fixed for sure right now.
Okay, I think that's really good advice. Moving on here, the last time we talked, it was a very different time. And people were blowing through their trigger rates, and we were hearing about how mortgage defaults were going to be on the rise. There was all this talk of debt restructuring. Can you take us back to that time period and just kind of talk us through, like, what actually happened? Because The reason I bring that up, we often have these scares when we go through these market swings, and people often talk about how there's going to be this wall of mortgage defaults, and it really turned out to be a big nothing burger last time we looked at it. But I'd like to know, like, were you helping people with debt restructuring? Was that really something that took place, and to what extent did it happen over the last year?
Yeah, so definitely that was a very interesting time when I was looking at a lot of individual mortgages that were above 30 years, that were above their trigger rates. It's very concerning for the client, right? And one thing I did notice was we provided solutions to help them, right? So you can do lump sums, prepay the mortgage, increase your payment. And we found that a lot of that got handled that way. And a lot of it got handled by rates coming down. So, a lot of people didn't have to raise their payment as high to meet that trigger rate. They increased their payment to what they could afford. And then as rates came down, it kind of caught up. Right. I would be lying if I said I see very many of them now. I honestly don't. From most of the mortgages that I'm looking at, I think they're within the trigger rate. I know the numbers have come down. So, alternatively, what a lot of people did is because there's all these renewals coming, they restructured, they added a borrower, they refinanced, they extended amortizations, investors sold, right? They unloaded the property. So, I think it's a lot of restructuring that people will continue to do to kind of deal with those things.
Makes sense. I mean, 60% of mortgages we're going to be renewing between 2025 and 2026. And just about every single article that was out there was talking about all the payment shock that was likely going to be originating from this. But it sounds like for the most part, folks have managed to figure out or refinance or re-debt structure, if you will, or like you said, sell their property and move on. But okay, well, seeing as the fall market's around the corner and everyone's kind of trying to get their sense of what's taking place, can you tell us a little bit about new business on your side? I mean, on ours as an example, we're having a lot of discussions about folks getting ready either to list in September, which is a typical time frame, September, October, fall market. We're definitely seeing a bit of an uptick in activity there, but we're coming off of like 30-year lows of activity. So you also have to carry that with some caveat, right?
Yeah.
But with that, I guess what I'm seeing is, can you speak to the mortgage originations? Are you seeing an uptick in mortgage originations? Are they getting busier this time of year as well?
Yeah, actually, what was really surprising is not so much looking at the fall, but like even in the summer, typically speaking, our volumes tend to dip in the summer. And we saw actually the complete opposite. Actually, we saw it really heating up, at least for myself and my team. So to give you an example, the last 2 months, so June and July, we did over 30 deals and over 19 million in volume, which is highly unusual for the summer. August, a little bit slower, but still about 15 or so million. But, September is definitely looking like it's going to pick up. And I think it's a lot of people that are just finally realizing that, hey, look, I can afford this. There's a lot of deals to be had out there. And I do believe that we will see a definite uptick even further in fall. But I mentioned this earlier, but the piece that seems to keep on growing for us is first-time home buyers, right? And it's really great to see because, at the end of the day, these are the people we do want to enter the market. We want first-time home buyers to buy their homes, to get into the market, but sometimes more so than an investor, generally speaking.
Yeah, I agree.
But it's all these, they call it like incentive stacking, the PTT, GST, FHSA, the HPB, the tax. There's all these things that have now come together. And I think first time home buyers are taking advantage of it. I've had people that, 2 years ago started a pre-approval and, I check in here and there and we're waiting. And then suddenly, not one, not two, but 10 of them are coming out of nowhere. Right. And I think that's an interesting kind of vote of confidence. When you start to see people make the decision that, hey, maybe things aren't so bad, maybe things are okay despite a lot of the noise. Hey, I can go in and make an offer on a home and get a deal. Take 7 days to do all my due diligence. I think people are starting to realize that, hey, it's great, and we're starting to see that actually convert on this side. So I think that will be a very interesting fall market for first-time home buyers, and it'll be interesting to see if they make some more moves. Another big segment is definitely people who are downsizing. So that will be interesting because I find that one, it's not hard on the buy side, but it's harder on the sell side. So, that will be an interesting market to see if we start to see some more conversion. Maybe that will, snowball and kind of keep things moving.
Would you say, this is just curious and kind of off the cuff, when you look at first-time home buyers, what's the average sort of mortgage amount that your first-time home buyers are really chasing? I'm always interested in knowing that because everyone comes from different backgrounds, but we see these huge, typically intergenerational wealth transfers taking place in order to buy property in places like Vancouver. Are you still seeing a lot of that?
You know what? It's actually quite interesting you mentioned that, because now if I think about it, I'm seeing a lot of young mid-20s that have their down payment themselves, which, I didn't really put a lot of thought into that until now, but it is true. And the average ticket size that I'm seeing is between, 4 and 500,000, which is very interesting because when you think about, entering, I had someone yesterday who bought a downtown condo for 550, right? They're young guy, professional, saved all of his down payment himself and, found a great deal and took advantage of it, and he's going to have a pretty decent mortgage, almost equivalent to what you would pay in rent for a property like that. Right. So, it's very interesting. But, of course, we're still seeing, the gifting, the parents typically, I see that more on the secondary, when you buy that second home, when you move from bought the first condo, now trying to get into the townhome detached. That's typically when I see the parents come in more. That's obviously because the ticket size is much higher. But that, first-time home buyer, condo, entry level, I am seeing people that, have a large portion of their down payment saved themselves, which is encouraging to see for sure.
No, that's great to hear. The more that people are able to do it on their own, the healthier the state of the market for sure. Okay, last question, Mychal, and it's the impossible question. Is your fall market going to be better than last fall market? Is it going to be busier, or are you anticipating it to just be, very moderate, very steady?
Just based on what we're seeing, I do expect that we'll see a busier fall market. Volumes are really trending up. Lots of things moving towards September now. So when we start to already have a lot of closings before the month even starts for that month, it's usually a good indication that things are picking up. But I actually think for the rest of the year, we'll kind of see some movement, and especially if there's a cut. I think my personal, just pure gut feeling is the next cut will really get things going, because I think that people are going to say this is the bottom. Because whether it's one cut or two cuts, it's pretty darn near the end of cuts. Right.
Yeah.
Or RBC, cuts are done. So, I think that once we get there, I think we'll start to see some movement, and I think that's coming in the fall.
Mychal, that's awesome. Great advice. And okay, so if I'm looking for a mortgage and I want to talk to you, what is the easiest way for me to find you?
So you can just look me up on Google or Instagram, Mychal Mortgages. Feel free to send me an email as well. My details are on there.
Right on, Mychal. Thanks so much. And for everyone else, we'll see you next week.